What's up, my fellow traders? Hope you all having an awesome day and I hope you all enjoyed your holiday and happy new year again. So starting with commodity analysis as usual with natural gas, gold, silver and crude oil. So throughout whole year, last year, I've been teaching you guys to look for entries, conditions, and my main focus was on the 4 factors, which is very quickly again, observation, condition, entries and target. So first we observe the market looking at any sort of pattern. If there is a potential entry, a pullback entry, head and shoulder pattern, any sort of condition, we look at first, we observe that, then we look for those conditions I've just said. Once the condition meets, let's say we have a pullback entry, in that case we enter our trades. Once we enter, entry is not enough. We need to set the targets as well, so that once our target is hit, we have the money in the bank. That is the goal of trading the financial market, not just gambling. We need to make money in the financial market with a minimum risk. So I need you guys to focus throughout this year as well, so that you can able to take efficient trading decisions. So let me show you what I've said in last whole week, so that you can understand all these 4 factors. Right at the termination zone, the way I take my head and shoulder bullish trade is if the price forms a left shoulder, then a head, and now we are in a process of forming a right shoulder. Now we are still within the termination zone, and within this termination zone, if the price forms a next candle which is a bullish engulfing pattern, and that must be within this termination zone. The first target will be till this termination box above. If broken above, we have a trigger of second entry and the price will likely push higher. Nice one. So as you can see, we had a nice bullish engulfing pattern right here, as mentioned in my yesterday's video, that if we have this pattern, we can expect a push up till this termination zone that is right above. Now we had a condition here on NEMEX platform. If I have a technical signal, which we had right here, the head and shoulder pattern had been played out nicely. I'm closely looking at to the price to break above my termination zone, which is right here. That is what we need to look at, a break above and close above. This pattern will be our entry number 2. You can keep a stop loss below, take profit wherever you want to take it. That's totally up to you. Like mentioned yesterday, the price is pushing up in a trend, and we have nice 1, 2, 3, 4 touches, mean the price is pushing up in a trend. And if we get a bullish condition within this trend line or above 50 EMA, right here, the price made a new high from the previous high, and as you can see that we had a big pullback followed by bullish engulfing pattern, and that happens above the trend line, happened above the 50 EMA and 20 EMA. Both looking at that, we have a chance that now price will push higher and we can go 1 to 2 ATR for the target. And we have an inventory report release that was less than expected. As you can see, the forecast came as less than expected, and with that amplifies the greater demand in natural gas, and that is bullish for natural gas. Nice one. So as you can see, the price has bounced up from this bullish engulfing pattern, and the price was here, the entry was here for me, and at this point, we had a take profit hit 1 right here, which is 1 ATR. If you hover over this candle, the ATR is coming up as 5. And as you can see, the 5 ATR target has been hit. That was my target number 1. And the target number 2 was a bit higher, which is right here. I'm still expecting a price to push higher. If you're already in the trade, which is right here, that's totally fine. But if you have exit your trade with the first target, that is also fine. That's totally up to you how you want to manage your trades. Awesome. So how nicely the price action is moving in direction we've been predicting, and how nicely we've been taking those trades up and down, but with all the rules, conditions, and with stops and target. And we started from here, as we knew that if the price forms the head and shoulder pattern, in that case we are just looking for our entries and with conditions. Now what to expect from here? Let's do a quick analysis. First, here on Ovanda, we have a price broke above the level I've been mentioning from last couple of weeks, that we are only going to look for reversal trades after the price will break above. Now this is just a process of a pullback which we have got now for aggressive traders. If we use the Fibonacci tool, as the price is now above 50 EMA, something like this, we have a hit of 50% retracement right here. For aggressive trader, this is itself an entry, and take profit can be 1 ATR, or you can manage it till 1.618 retracement. Stop loss can be below this pattern. So this is for aggressive trader. You can manage it from the 1 ATR till 1.618 retracement. As now I'm expecting a price to push higher, at least this high, then we can expect some pullback and continuation towards the next level of resistance, which I'm going to mention in a very short moment. So that is what you need to look for an aggressive entry. For less aggressive a trader, we can get a possible pullback to 50 EMA, above 50 EMA, or one candle can close below 50 EMA, and then the very next candle can close back up above 50 EMA, and that must be a bullish engulfing candle. If that happens, we have a less aggressive way to enter exactly something like this, a move like this. If we get again after the price has just made a new high, in that case we will have a pullback entry above 50 EMA and we are good to go long. Use 1 ATR for the target. Again, I'll be uploading a video about the ATR indicator, moving averages, everything, so that if you're a beginner you have no confusions. So keep looking for these conditions I've just mentioned. Once the price forms a condition, we are good to go long, not taking short trades at this point, as now we are above a nice trend, above the trend line and above all the EMAs. Now if the price continues to push high, I have the zone ready for you guys. It is on this platform, 2.770, that goes to 2.870. This is the zone from where I'll be looking to enter my sell trades with bearish engulfers or double top entry condition, inverted hammers, or 382 candle bearish for my entry condition. For now, we are just looking for buy opportunities, and we can also get a retest of the zone that has been recently broken, which is a green zone, which is 2.419 goes to 2.493, a zone. If we get a pullback in between this zone, and in between this zone we get a bullish engulfer or a condition like double bottom, in that case we are good to go long as well. So these are the conditions for buy trades I'll be looking at. Keep looking for that. Once we have a condition, we are good to go for our entries. Now here on capital.com, the zone above, which is right here, 2.906, that goes to 3.036, a zone from where I'll be looking to enter my sell trade with the conditions I've just mentioned. I've already sent these zones to my members yesterday. You should have these zones on your charts already. Now the zone with the price is currently inside of, it is 2.492, that goes to 2.589, a zone. Now I'll be looking to enter my buy trade in if we have a next candle that closed as a bullish engulfing candle. If we have a next candle as a bullish engulfing candle, we have a buy signal and we are good to go long. Use 1 ATR for your initial targets and then manage it till wherever you want to manage it. Stop loss can be below 50 EMA or the trend line accordingly. So keep looking for that. Once we have a condition, we are good to go, as now we are broken above the zone as well. But ideally, again on daily time frame, I would like to see two candles must close above the zone, but on this platform we have just one candle that is still not closed yet. But looking at the uptrend, I'm expecting a price now to pull back and form some sort of pullback entry, which I'm closely looking at above 50 EMA. As exactly the same on Ovanda, to use the zone as an aggressive entry, I want to see a close of a daily candle to use the zone as my buying area. So for now, I'm just looking for a pullback entry or entry with a Fibonacci retracement. So keep looking for those. Here on NEMEX, if you have a next candle as a bullish engulfer, we have an entry condition. Make sure it is a bullish engulfer, because sometimes the candle opens above the previous candle. In that case, that becomes an invalid candle. So make sure it is a valid bullish engulfing candle. Once we have that, we are good to go long. And the zone, the green zone is 2.471, goes up to 2.585, and the zone above where we are looking for sell trades, a resistance area is 2.853, that goes up to 2.968, from where I'll be looking to enter my sell trade if you have a good push up out of natural gas. Right here, what do we have? We have gold, and the exact move I have mentioned in my last video, a detailed move I mentioned in my last video, that we can get a possible push up out of this bullish engulfer, and that has hit your take profit, a nice $8 move up from here, which is more than $8, around $12 move up from here, and now the price is forming a right shoulder. So we have a left shoulder, we have a head, and now the price is about to hit the termination zone. So now we have the termination zone. In this case, we can still get a push down to termination zone, and then the price can push back up. But let me show you what I've said in my last video so that you can understand the conditions and entries. Getting a possible head and shoulder pattern bearish. Now, if you ask me that if that is a valid bullish signal, yes, it is a valid bullish signal. So looking at that, please listen to me very carefully here. What I'm expecting 1 ATR push higher from here, which is $8. So from here, the $8 can be something like this till 2071. If you have, let's say, entered here, in that case the $8 push up will be 2074. So wherever you enter, I'm expecting a price to push up to $8. So now we have a left shoulder, we have a head, but we still do not have a right shoulder, which we are waiting, and there is a highly likely possibility that we can get a right shoulder. Now for that, the rule is I want to see a price to come back and hit this zone right here, a termination zone which is right here, the number in blue on Oanda. Only then I'll start to look for another bounce to this termination zone, and then I'll start to look for a bearish candle. For now I'm expecting a little bounce and then a push down. If it pushes up and then pushes down, then I want to see another push up and a possible signal here. In that case, we have a head and shoulder pattern completion, and I will look for my sell trade. Awesome. So now, as you can see, the price hit the termination zone, almost hit there, but using some discretion, we can still get a push up right here. And if we have a push up now without a candle go equal to the head of this pattern right here, in that case we will have a double top condition. But for the head and shoulder pattern, all I want to see a push up in this green box, which is right here. Once we have a push up in this green box, all I want to see some sort of bearish condition like this, a bearish engulfing candle, or I want to see inverted hammer or a pin bar. If we have that, these two candlesticks inside this green box, we have a very strong sell signal and price will likely fall. So if you are an aggressive trader, once we have a condition here, you can enter aggressively, placing your stop loss above the head, take profit wherever you want to take it. Or if you are not an aggressive trader, you can also wait for the price to break below this termination zone, which is right here. A break and close will be an entry. Stop loss can be again above, take profit wherever you want to take it. This is how you can enter in a less aggressive way. So these are the conditions I'll be looking at for my next entry. We have a nice take profit hit with this bullish engulfer, and now I'm looking for a possible reversal if we have a condition I've just mentioned. Then we have silver. Now silver is still ranging sideways. If we broke below this low, in that case we have a continuation towards the downside, and the price will likely head lower to 22.25. that goes to 22.65, from where I will be looking to enter my buy conditions. For now, I'm not looking for any trades for silver. Sell will be below this low, and buy will be only once we are broken above this high. If that happens, in that case I'll start to look for my buy condition. For now, I'm not looking at silver until it breaks below or breaks above the previous high, something like this. So this is my little box of consolidation. I want to see a breakout above or below to take my entries. Then we have crude oil. It's now broken below. As you can see, we have rejection at 50 EMA. Price has broken down, and now we are pushing lower. At this point, I'm paying attention to the zone below, which is 66.00 goes into 67.85. If the price gets to my level, I want to see bullish engulfers or double bottom entry condition. Hammer candles or 382 candle bullish will be my condition to enter my trade. So for now, if the price pulls back now with few green candles followed by bearish engulfing candle, in that case we have a sell signal, and we are good to go short using 1 ATR for the target. So I'm not only looking for sell trades for crude oil, not looking for buy trades, as now we are trading below 50 and 20 EMA. Buy trades will be only from the zone here in green I've just mentioned. So that's it for commodities, guys. Any questions, any confusions, you can always email me at support@moneymarkets.net. I'll get back to ASAP. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.